Okay, guys, welcome. I'm going to get right into it. Quick stock market chart rundown. We're going to use technical analysis to find out what's going on with these charts. Again, everything in this channel is just my opinion. It's what I see in the charts. Doesn't that mean it's going to work out? And again, risk management, position sizing, risk reward management. That's all key parts of technical analysis. No one's going to be right 100% of the time, so you want to manage your positions accordingly. Okay, we're going to start out with the tech sector, triple Qs. We're starting to drift lower, actually. The level I was looking for was a backtest of this trend line right here. You can see right up around 365.45. And we got close. We got about 365.85. At that moment in time, it was about 367.52 right up in here. But we've been selling off ever since. So maybe the sellers are going to step in. Maybe they're going to come in and we are going to get that back test. So that's, again, just the key levels to watch would be the trend line here, marked out right about there. And if you look at the hourly chart on triple Qs, it's floating right up there at about 364, right in that level. So a break above that, if it can hold, that would be bullish. Otherwise, we are likely going to continue lower down towards my next target, which is 342.50. That is where I think we're heading. That's kind of how I'm positioned, but I do think we're heading down to 342 as the next level of major support. So we'll see where we end up. SPY, no real change. Basically, I've got this level of resistance, which is this trend line. And, we're just continuing to kind of hold under trend line resistance right there at 436.23 area. And then I've got some support right there at 431.56. So we're just kind of wedging, compressing. Well, we're going to move out of this here pretty soon, one way or the other. So a break to the upside will be bullish. A break to the downside is bearish. Things to look for on that. If we break to the downside and we start to move impulsively lower, then we've got bigger picture things going on. Because on the weekly chart, on the SPY, coming off the 2009 lows, we have this trend line marked in red. We held support here, 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 all through here. Once we broke in 2018, it's been resistance. And the Fed's been basically responsible for pumping this up. It really hasn't been earnings growth. It's been Fed stimulus. So the Fed pumped us up here. We hit there. We hit COVID. Then it crashed. Then the Fed came in again. They've managed to recover the trend line. But, we'll see. So the bottom line is if we break, especially a weekly close below this red trend line right here, and if it can't snap back the very next week, I would say we've likely seen the highs in this market and we're going to head much lower. But until that happens, we are above this trend line. We're above support. So that's what I'm watching for in the short term. Couple trade ideas. These are short trades. JCI, you can see we had support. I have had it marked out here at 68.13. And again, we came down to it right here, and we popped off that a little bit. We're back right at it again. So testing support again, a break of that brings us down to the next level of support. As far as I can tell, it's right here at about 66.06. So I would watch for that. And then another one that's very similar to this is EMR. This one's starting to crack. We'll see what the kind of the day we get and where it closes. EMR, we had it. EMR has an uptrend line off the March 2020 lows. We put in negative divergence building for quite some time, just a big, long negative divergence as we were building. We got our initial sell signal right here, and then they rallied this thing for months against that sell signal. But then it did sell off and came right back down to support. We hit it, the initial tag. After not seeing that for a while, you get a bounce. We bounced, we hit it again, we bounced again, we hit it again, and now we're starting to break it. So we'll see how, if we get the daily close below this level, I would look for lower prices. And I would say the next level supports 87.20 on that one. Someone asked me about CAR. So CAR, basically, we had this uptrend line here marked in red on the daily chart. We backtested once, backtested twice. But they've managed to pretty much recover that, and it looks like it's impulsively heading higher. So once they recovered it on Friday, I just stopped out of this trade for a small loss. Again, this was a pretty volatile position. So I mentioned when taking this short, you wanted to size down a little bit. You didn't want to take a full size position because of the volatility. So again, just stop out, and because of the sizing and, kind of the smaller size position, it didn't really do too much damage. But I did stop out on Friday, and so far it's just, impulsively, it's pretty much going parabolic. I wouldn't be interested in reshorting this unless I see some sort of a false breakout or a crash back down, a big impulsive red candle back below this 129.30. So that's kind of that one. I'm just closing that trade out. Blackrock continues to kind of tread water right here at support, which is 840.36. So I've got that kind of marked out. We circled it. We just hit it once, twice, 3 times. Broke briefly. They recovered it, but we're back below it. So, I think it's going to get rejected. I think this thing has a lot lower to go. I'm looking at 791.40 as the next level of support. Likely I think you'll probably want to step in and cover slightly above that level if we get down there. But from where we're at now, that's another, roughly 5%, 5.5% to the downside before maybe we see more of a sustainable rally. We do have some bullish divergence showing up now on the daily chart on this. So there it is, meaning that this low right here was a lower low in price, but a higher low in momentum on the RSI, not there on the PPO yet. So I suspect we're going to get one more move down. Maybe we'll have that bullish divergence show up in the PPO at that point in time. So watching that one. So I want to point out the semiconductors. I've talked about these for the last couple days. A couple things that are interesting. You'll see here I've got this trend line really coming off of the June kind of time frame. But we have lots of tags of support on that, 6 to be concise. And you can see we clearly broke that upward trend, just multiple days of selling. We had a low kickback rally. I think we're resuming the downtrend. And looking through some of these components, let me point out some levels though. I do think we're heading down to the level of support. Down here, it's kind of a support zone of 389, 390, somewhere right in there. Some of these components, so Intel, something's going on here. It's not breaking impulsively yet, but I think if we take out these lows that we've recently made, you want to, it's somewhere right in there, right about where we're at a 52 or so. We start taking that out. We've got some bigger things going on with this one. You look at the weekly chart here. This is going back to 2009. So here's your entire bull market since the Great Recession of 09 in Intel. Clear uptrend line there on the weekly. We broke once back here. This is your COVID drop, I guess, or kind of. They recovered that, and it was a bear trap. But now you can see we're back below it right there. So we start to break to the downside. You see consistent selling in this. We've likely seen the highs in this stock at least for who knows how long, but. We'll watch that. So another way to look at this, if you want to look at bigger picture, really bigger picture, going back almost 20 years, is a big cup and handle. Potentially there's a big rounding bottom. So maybe we want to break out, but I think maybe we do this, break down to about 28.50 and then we could break. Those are all just big what ifs, but things to watch in the short term is, some more selling down here below the most recent lows. Looking at the daily, again, right there about 52. We start to break that, and it's going to continue to put pressure on the semiconductors. AMD, I'm watching this one. This one, they don't want to let it break. They're really trying to hold it up. But you can see from 2016, here's your trend line, clear up trend line right there. Negative divergence, big negative divergence. That's, pretty consistent with across the market. We had a huge ripping rally just straight up, but that has failed, and we came back below that trend line. We backtested once, backtested twice. We also set up the secondary trend line right here, and this is what they're trying to hold on to right here. And you can see we're slightly below it. Not impulsive, though. I want to see that selling show up in an impulsive manner. I want to see it really start to sell down, see the algos kick in and start to sell before I'd be interested in shorting this thing. Otherwise, they're likely going to just grind around, kind of hold this, maybe, rally it again. So that's what we need to see is impulsive selling at or near this level. And if we get it, then I think we've got some support right here at 98.70. When we break below that, and I think we head straight down to 74.06 or, about 74. And we have this thin zone I've been talking about for a while. There's this big thin zone right here. So if we get into that thin zone, and the top of the thin zone is about 74, bottom of the thin zone is a 58.82. We get into that thin zone, we're likely going to fall straight to the bottom of the thin zone. And that's where I would see kind of a final target on this if it's going to sell off down to about 59 bucks, which would be about a 50% drop. So a good size, that would be consistent with a good correction in this stock. Okay, gold, more of the same, although I think gold's building a base for the next leg higher. Still kind of, more of the same, just sideways basically in gold bullion. Holding above that support area, we can go either way. We could dip down and hit this trend line again at 1720 and then bounce. I'm really more concerned about the trend line down below, kind of not where we're at right now. GDX, the miners, has been in this bullish falling wedge for quite some time, working its way lower, and we are starting to break to the upside, but it's not impulsive. You need to see an impulsive breakout to consider this wedge pattern broken, and it's just not there yet. So if we don't get that impulsive breakout, then we're likely going to just continue to trade within this wedge, and that could likely mean some lower prices from here, maybe grind around some more, then break out in the future. So that's what you need to see. Until then, we're at resistance right now. I think we're going to break to the upside because we have bullish divergence on the both momentum indicators. That's been building for quite some time. So each new low that we've made here has been a divergent low. That bullish divergence tells me we're going to reverse trend soon. I don't know when, but if you see that breakout candle, that would be your buy signal or your entry, your trigger entry, in my opinion. XHB Home Builders continues to kind of flag out right here. So we've got kind of the initial flag. We're just flagging out. I think we're going to continue to the downside. We need to see a break. Likely will come with the rest of the market breaking down. So kind of nothing going on that. So I'm looking for some new trade ideas. If you guys have any, leave a comment below of any ideas that you maybe have. Stocks that look, either long or short, look like good setups. And if you're not, if you don't know how to spot a setup or what to look for, take my technical analysis course. I go through all that in the course. Link in the description below. Otherwise, guys, leave me a thumbs up. I do appreciate that, and I will catch you on the next one.